there, traders and investors. Bennett Tindle with TradingAnalysis.com. Today is Wednesday, December 2nd, 2020. We're just around the corner from the Christmas holiday as well as the New Year. 2021, just around the corner. Very, very interesting considering how challenging of a year 2020 has proven to be. We had the global coronavirus pandemic. We saw some very significant swings in equity markets. So I'm excited. I'm excited for the holiday season. I'm excited for the new year. And I'm very interested and curious to see where financial markets want to take us moving into 2021. So today, what I want to talk to you about is two individual stocks. And the stocks that I'm here to talk to you about today are that of Apple and Netflix. And both of these names have been in a period of consolidation. And what you're looking at is the MotiveWave platform. This is one of the tools in our toolbox that we utilize to analyze financial markets, and we do so viewing them through the lens of the Elliott wave theory. Viewing Apple through the lens of the Elliott wave theory, we see what's referred to as an Elliott wave triangle. And this is a textbook Elliott wave triangle where you have lower lows, lower highs, contracting price action, or I should say higher lows and lower highs, contracting price action. And this sort of a pattern is actually very healthy to the longer term growth of an instrument or stock, equity in this particular case. And we do think that Apple is gearing up to make a move here in the coming weeks. So taking a look at the chart in front of you, we are viewing the current consolidation as an Elliott wave triangle, and we're viewing it in two different interpretations. And essentially, interpretation number one puts this in a fourth wave correction, which would square up to a very shallow and short wave two, which took place back in April. Alternatively, we're actually looking at this wave four triangle, which would actually square up to the correction into the March low. What's interesting here is this particular interpretation, which squares up the current triangle consolidation to that of the March low, would actually have more bullish implications. We would be looking for a larger fifth wave advance. Whereas if this is a smaller degree post triangle breakout, we'd be looking for a move to our first target of the external 1272 retracement up at $145.83 per share. If in fact this is a wave 5 of the higher degree trend, we're actually looking at a fib extension zone which would take you between 179 and 206 for shares of Apple. So let's get back to our interpretation here on our red count, and let's go ahead and zoom in on this price action. And what we're going to do is we're going to get off the daily charts. We're going to take you down to a 1 hour and as well as a 195 minute half day time frame. We're going to focus in on all of this price action. So essentially from the September 2nd high through the price action and close of today's session, December 2nd. So off the daily, transitioning down to a 195 minute half day chart, we are watching this possible triangle break in progress. We had identified a zone of support near $112.48 per share. That's the area that we were looking for a reversal, and that's the area that you'll notice we ended up bouncing off of quite significantly. From the 112 low through today's high, we've already seen a 9.5% advance in shares of Apple. You'll notice 112.48 was our Fibonacci support zone, and the low was 112.59, 11-cent difference. Really rather remarkable. The trigger point is a break and close through 125.39. A break and close through 125.39 would confirm the triangle has run its course, is complete, and that would have implications through the previous wave 3 highs at 137.98 and up to our external 1272 retracement at 145.83. Let's get back over to the daily and let's switch to the alternate view, which suggests this is a larger degree or higher degree wave 4 triangle. Here, I'm entertaining the idea that maybe we do have one final leg lower and that this initial move was simply a head fake. But if in fact this was D of the triangle completing on November 10th, that was E, look where the overall triangulation came to completion. Zooming in off the daily, down to the 1 hour chart, you'll notice that a 161.8% time projection of wave 2 compared to wave 2 of the same degree would call for completion of this corrective pattern on November 25th. Look where we completed, potentially November 24th, and taking you back to the daily chart, this is a very common wave 4 compared to wave 2 time relationship. So when you see a fourth wave that exceeds equality of time elapsed in wave 2 of the same degree, you're often looking for that 1618. So we're bullish Apple. We really like this. I've added this back at 113 and change. I added this back to my swing trading portfolio. Currently have a full-size allocation on, and I'm really liking what I'm seeing here in Apple. We're actually going to take a look at the RRG for this particular name as well in just 1 second. The next name that we have for you is that of Netflix. And let's back all the way out to a weekly chart and put this entire move into perspective. So off of December of 2014, that's when we began the 5-wave subdivision of the higher degree orange primary degree wave 3. Orange primary degree wave 3 should subdivide into a nice 5-wave structure, which we have up in 1, down in 2, up in 3 into June of 18, sideways consolidation effort in wave 4. And you'll notice, look where this fourth wave came to completion. This fourth wave completed right off equality compared to wave 2 in terms of the magnitude. So net percent retracement in wave 4 was equal to that of wave 2, which is a very common relationship. Oftentimes you do see corrections of the same degree tend towards equality. So I love that the fourth wave completed there. We started to press higher. Now zooming in on the weekly time frame, off of the September 2019 lows, we have a move up in 1, a very sharp wave 2 correction into the March low. Notice that wave 2 correction was just a 61.8% retracement. In fact, you'll notice the Fibonacci levels that we're looking at here are color coordinated, and this is a component of the trading analysis version of Motive Wave. We have a fantastic relationship with the team at Motive Wave. Amazing tool, very powerful software. And if you're serious about Elliott Wave, it's the only way to go. So off the weekly chart, you'll notice on the weekly chart, we've just been kind of consolidating after rejecting the middle trend line. So we're mid-trend channel. We've been in sideways consolidation since July 11th. That's the last time we saw Netflix print a high. And off the weekly down to the daily, you'll see that we have a period of sideways consolidation that ended with corrective wave Y demonstrating equality to W. That was at 464.21. We are tracking the potential makings of an impulsive move higher. We're looking for a 5-wave move up, 3-wave corrective pullback. Then we're going to be looking to carry this much higher. In fact, you'll notice we've got some pretty significant price projections here for shares of Netflix. So don't discount this one. A move up to the mid-trend channel, 723 is not out of the question. It's about a 50% move from current price levels. So that's Netflix. Fantastic looking chart. Back down to the daily, you can see we're trying to count a 5-wave structure out of this zone. Now let's take a look at the relative rotation graph comparison of Netflix and Apple compared to the benchmark that we're going to be using, and that is the S&P. So we're going to switch gears from the Motive Wave platform. We're going to jump over to Optuma, and Optuma is a new tool that we're utilizing here at Trading Analysis. Terry Long, our research director, has done a fantastic job of kind of spearheading the effort, and now the remainder of the team, the rest of the team rather, is jumping on board and joining him in the world of Optuma. In fact, the creator and founder of Relative Rotation Graphs, Julius de Kempner, we've had him on twice on our TA Live Wednesday live stream show. You can check that out on Todd Gordon's YouTube channel. So taking a look at Netflix, let's dive into the RRG, and let's first start it out on the weekly chart. And what we're going to look at here on the weekly chart, you'll notice I still have Roku and Tesla in here. If you follow our work on our TA Live Wednesday live stream, we were pointing out Roku and Tesla, and as a matter of fact, we actually had some really fun trades with our members in these particular names last month. So this is our members website, and you'll notice down here, let's see, it was 11:10. We entered an upside broken wing call butterfly for Roku. We paid $1.15, so $115 per fly. We took our initial half trade exit at $2.10, and then our final exits were $3 and $3.90. Really had fun trading that with our members. We also traded Tesla, so we picked up an upside broken wing call fly in Tesla, $3.55 on 11:20. We got that one off for $5.35, $6, and our final exit was $6.30. You'll notice the here on the weekly chart, the strength of Tesla, the strength of Roku, those are now starting to curl lower ever so slightly. The two names that we're focusing in on, and in fact we're also focusing our efforts with our members for trade opportunities in these particular names, Apple and Netflix. You'll notice Apple, although in the lagging, or I should say weakening quadrant on the weekly time frame, the trend algorithm, which is a component of the RRG algo in technology, is indicating that this could be a very brief visit in the weakening quadrant and has a good probability of reversing and moving back into leading. Netflix, you'll notice after back in 6 of this year, so 6 of 20, we moved into weakening. We try to move back. We're within a 1 standard deviation compared to the S&P, compared to the benchmark, and it's starting to move back into lagging. But let's take a look at what's happening with these two names, both Apple and Netflix. So Apple still looks relatively healthy on the weekly, and I do think based on our wave interpretation combined with our RRG analysis has a very strong chance of returning to the leading quadrant. Netflix on the weekly chart does look a little bit concerning. However, I will say that it's a very short tail coming out of weakening, trying to move maybe through lagging and into improving, which becomes even more evident as we drop it down to a daily chart. So let's drop it down to a daily time frame, and let's take a look at the last year, as we don't need any further price data to illustrate this point. So you can see we have Tesla and Roku, the two names that we traded last month, massively outperforming, starting to roll over there. But take a look at price action in Apple and Netflix. And let me go ahead and just hide Tesla and hide Roku so we can kind of focus our efforts here. We're looking at 7 bars, so 7 days worth of trading action. You'll notice that Apple and Netflix, as we've been just kind of consolidating, have really been within a 2 standard deviation window of the S&P, of the benchmark, okay? So we've just kind of been hanging out here in that 2 standard deviation window through consolidation. Take a look at current price action and look at that rapid reversal in Apple here on the daily as it turns, rapidly reverses from lagging. You'll see that the trend algo, the minute we had the change in direction, picked up on it and is now indicating a return back to improving. So there's Apple with a very sharp reversal, moving back into improving. We also have Netflix, although the trend algo didn't like the rejection of the 100 line there. You'll notice it too is moving through lagging into improving. So I'm keeping my eye on that one to come out of consolidation and return into the leading quadrant. Apple, Netflix, very excited to see where these two names take us. Thank you guys so much for tuning in to today's video. Be safe, stay healthy. We'll catch you on the next free video update. Take care.